Good day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 9th of December, 2019, just after 4:15 p.m. Central Daylight Time. I have a favor to ask of you. You know, I put these out all the time, these videos for you, and I'm going to put out another new video, and it's going to be only on ETFs. Now, I'd prefer the different categories that you want. It could be anything in the stock ETFs. Obviously, an ETF is a stock product, but you understand what I'm saying. Give me the different ones that you think would be interesting for people to look at. I'm going to start this service in January, but I'm going to start practicing it now. So your help, greatly appreciated. All you need to do is either go to our website and write our admin, and all you do is say contact us. It's up there. You can even go obviously onto YouTube and put your comments there, because so many of you watch us on YouTube, and I'll pick them up from that area as well. Now, this is a crazy week. We spent the whole day today, as I'm sure you know, with the House Judiciary Committee grilling so many different people, arguments between Democrats, Republicans all day. Began at 9. I think it's now over. It's 4:15 in the afternoon, but I'm not sure. Then we have the FOMC, a two-day meeting that starts tomorrow. We have the Brexit vote taking place in the UK. We'll get the judgment as to what the people think on that. And, of course, we have the Saudi Aramco IPO launch on the 11th. And then by the 15th, we're supposed to hear, is the U.S. going to put tariffs on China or not? Now, that doesn't mean we have a deal. I don't know if we're going to get a deal. I don't know if you're going to get an extension. I have no idea. But it's keeping people nervous. And there's just so much going on. This was the quiet day of the week. It's going to pick up now in momentum, so get yourself ready. On the energies, down a little bit, as you can see. Bonds and notes got a slight bid. The dollar pretty much down a small amount. And metals were basically unchanged, except copper, which got a nice bid, as we saw that China's consuming a lot more copper, and they were able to do a lot of imports this year. Now, their exports, we know they're hurt, and we know they're hurt because of the trade war. We'll see where that carries. When we look at the weekly chart of the S&P 500, we're in a bit of a correction. But you just came off the highest high. You finished out last week at 3146 on a closing basis, so you're down 11 points. Whoop-de-doo. It's still very much a bullish chart at this point in time. When we take a look at the chart action, the daily chart action doesn't look as good as the close-only action. You entered a correction phase, you're getting a bounce to it, and the question is, how does it resolve itself this week? I'm still thinking Santa Claus. I have no reason to think not, but I'm also watching all these events taking place that no one has control of. For the moment, the swing line has got a pattern of lower highs and lower lows. That gets negated if you take out the highs of Friday of 31.51. In fact, that could end up with higher lows, higher highs. But right now, the bears, for the moment, took control of the swing line study. It gets negated because the swing line gets filtered by key moving averages. And since price is over the 18-day average of close in red, that means the bias is up. When you have the swing line down and bias up, I define it as you have nothing at that point in time. Bollinger Band resistance, pretty clear, and you can see how it's refrained. In fact, each time it's been hit recently, the market has had a problem going anywhere from that. That doesn't mean it doesn't resolve to higher prices in the end, but it's an area where the pros stepped away and the market hasn't gone anywhere for a moment. When we look at the momentum in the market, you are overbought. Any reading on a closing basis over 70 in the slow stochastic, I define as overbought. The market is not even trying to develop one of these patterns of both the numbers that make that oscillator up going sideways over the 80 level. We're just playing an overbought market that has the swing line down to bias up. In the NASDAQ, it is very, very similar. The first challenge of the upper Bollinger Band rewarded traders because the market fell back. Now the market seems to be fighting. Wouldn't surprise me if you hang around here for a bit, but you can see how the band is getting itself well defined. Momentum is flat. The swing line has a higher high and lower low, very different than the S&P, and the bias is up since you're over the 18-day average. I see nothing there. When I come to the Dow, new problem. I see nothing here. I've got the higher high, lower low pattern. Seems to me the battleground's the 18-day average. Momentum is up, bias up, but you don't have a swing line trend. In the Russell, this is the only one of the indices in an uptrend, but it's entered overbought territory. It's got higher lows, higher highs, just the way it did from this area in the Bollinger Band. You got up on Friday, challenged it again, and you got thrown back today. Not a surprise at all. In the VIX, I know that I was on last week and I had said when the market was up here, probably on Tuesday of last week, wouldn't surprise me if the pros were hitting the market finally. We had gotten through an important piece of information by then. It started settling back. The 18-day average could be where the support comes in. This is today's action. So you went from the 18-day average right back to the Bollinger Band 100-day average. You don't have a trend here. You have a higher high, lower low. I think it was a big short covering day. In the bonds, I don't see a trend. I see a market with a higher high, a lower low. It seems to be narrowing in the black bands, the Bollinger Bands. Momentum-wise, the market is knocking on the door of being oversold. Any reading where you get under 30 is an oversold condition. You're at 30.31, so you're knocking on that door. In the 10-year notes, let's stay on that theme. You're oversold on the close. You got a 28 reading, pattern higher high, lower low. Wouldn't surprise me if you fight this battle at the 18-day average of closes. TLT, higher high, lower low. This happened on Friday when the market broke through, as you can see, and now it's just sort of hanging here. So I don't think anybody's got control of that market, and it's oversold. Trying to write a newsletter last night and this morning, I just kept telling people the same thing. I don't see anything, and I think you're seeing why in so many of the markets. Dollar index. Over here, last week, you made your first challenge of the lower Bollinger Band. That was Tuesday, so we'd gone from the high to the low. Yes, it pushed on it a little bit, but snapped right back at you. And that's what you expect out of these bands. Now, is there a trend? Not the way I define a trend. Higher high, lower low. The market's correcting an oversold condition. It still has a reading under 30. And if the market takes out tomorrow, only tomorrow, this low of 90, what is that low, 97.20, that gets ugly in the market because you take out the low of an outside day. The problem for me is I don't have any targets under the market, so don't know what to do with that. In the eurocurrency, the swing line is down, lower highs, lower lows, but you went right to that line in the sand, that 18-day average, and held it. So while the swing line's down, the bias is up because the market is over the 18-day average, and you're correcting, current tense, an oversold condition. How will this market react to the Brexit vote is going to be a big question. And then, of course, you have the British pound, which the polls still show about a 9-point lead for Boris Johnson. The question isn't if he wins the election, in my opinion. It's if he wins, and does he get a majority in Parliament to do anything with, instead of a coalition that he has to put together. Higher lows, higher highs, running the upper Bollinger Band. You get over it, you pull under it, you come right back to it. And you're trying to embed the slow stochastic. Both numbers today were over 80. They were both over 80 on Friday, and they were not that way Thursday. Tomorrow's a real important day in this market. Then we get to the Japanese yen. Now, Japan saw better growth prospects. I wrote about that in my report this morning. You've got the higher low, higher high. You don't want to see last week's low. Well, this was the low that I care about, 91.78.5 taken out. But do you disagree that you've got just a sideways pattern in the Bollinger Band and just chopping around in there? Very hard market to catch anything from. Bitcoin got hit again, and until you take out now today's high, be it on Tuesday or Wednesday, you've reestablished lower highs, lower lows, momentum flat, but the bias down. The bears grab control. They lose it if today's high is taken out. That could spurt you not only to the 18-day average, but maybe even more short covering. Don't take that out in the next 2 days. The bears are really wrestling, and maybe they're talking of getting the market back down to the lower Bollinger Band. In the Brent versus WTI crude, you know it's all going to be about the Saudi Aramco deal. We'll probably get some number. In fact, we're going to get tomorrow the API and then the EIA numbers the next day. But does the market look at that as hard as they're going to look at how the IPO launch in Saudi Arabia goes of Saudi Aramco? To me, I'd be looking at the EIA API. There is no way the Saudis aren't going to have a successful launch. We're not talking a democracy. When we look at the Brent versus oil just by itself, we get the lower low, higher high, a stall against the upper Bollinger Band. Now, another thing the market's going to look at is this tariff situation between the U.S. and China. Take those off, and that could act as another boost in the energy complex, because you would think that helps Chinese consumption. It takes away some of this problem that we've had. It's not going to be all of it. The intellectual property and other parts won't get resolved, but maybe that gives the market that Santa Claus boost that it needs so bad. Same in WTI crude, which is more bullish looking actually than Brent. It's got higher lows, higher highs. It went to the upper Bollinger Band on Friday, first challenge in a long time. What do I say on the first challenge? Typically, not always, but typically, markets back off, and that's what you've done a little bit. In the gasoline market, I see a battleground at the 18-day average. Past 3-4 days, that's all it's done. The market has a pattern of lower highs, lower lows. The settlement, though, is over the 18-day average, so the bias is up. That negates it. You're pretty neutral right here. And in that gas, remember what I was saying? You lost the embedded reading back here. And with that, I'm normally looking, here's where you lose it. I'm normally looking for the market to start up and get over these highs. In fact, I was ready to pull the trigger in writing my news report. It's ready to move. And instead of doing that, it just stalled itself out on Thursday, fell back on Friday. To me, that was an ugly play. I didn't expect today to gap and go to the lower Bollinger Band, but as so often, the first challenge after you've just hit it, after a rally, the market bounced away from. But the trend, there's nothing bullish on this chart. It's looking bad. I want to remind you about the research that we have, and I'm going to be repeating something. Very shortly, my cyber deal of the week is going to end. It's going to end this week for sure. So if you're interested in taking advantage, look up the email we had. We'll send another one out in a day or so. But in the meantime, if you haven't seen what we write about, probably a good time of the year to do so. Our analysis written by guys, and I'm telling you, if you see my hair, most of us around here look this way, and we have years, decades of experience. I'm talking the individuals. It's pretty interesting, the group that we have. If you take a look at all this, these are the different categories that we cover. We cover options, the futures markets on them, what we think the commercials are doing. So if you'd like to see this, it comes to you by email. You can get it in our different platforms if you have any of those. How do you get it? Go to our website under free offers, click what you'd like, we'll get it to you. You can also call my staff, they'll get you signed up. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.